Welcome to MarketSnap's daily market rundown. One name surged 22% today and stole the spotlight, but the real story was a brutal split between the winners and losers of the AI memory boom. We're unpacking SanDisk first, then the session's bigger themes. It was a day of stark contrasts on Wall Street. The S&P 500 and the Dow barely budged, but underneath the surface, a massive rotation was in full swing. The AI trade is no longer a monolith. It's becoming a story of haves and have-nots, and today, the memory and storage players were the undisputed kings. Let's get the headline numbers out of the way. The Dow Jones Industrial Average eked out a 0.14% gain, closing at 51,920. The S&P 500 was essentially flat, down a fraction of a point to 7,357. The real action was in the Nasdaq, which dropped 0.46% to 25,358. Dragged down by the mega-cap tech names that are feeling the pinch from rising component costs. The Russell 2000, however, bucked the trend with a 0.71% gain, suggesting some of that money is rotating into small caps. The big story today was the memory and semiconductor equipment complex. Micron Technology absolutely smashed it, surging nearly 16% to an all-time high after a blowout earnings report. The company locked in a staggering $100 billion in customer commitments through 2030, signaling that the AI-driven demand for memory is not a flash in the pan. This lifted the entire sector. SanDisk rocketed 22%, Applied Materials jumped over 13%, and Lam Research and KLA Corp both added over 7%. But for every winner, there was a loser. The flip side of this memory boom is that it's squeezing everyone else. Apple was the day's biggest large-cap loser, plunging over 6%. The company announced it's raising prices on Macs and iPads by 15% to 25%, directly citing the soaring cost of memory and storage components. Tim Cook called it a 100-year flood. This is a perfect example of how one sector's boom can become another's headwind. Dell also dropped over 5%, and Palantir hit a new 52-week low, falling another 5.5%. Looking at the megacaps, it was a sea of red. Beyond Apple, Microsoft fell 3.5%, and Amazon dropped over 3%. Even Nvidia, the godfather of the AI trade, was down 1.6%. The market is clearly repricing the risks of this AI infrastructure build-out. While the memory makers are cashing checks, the hyperscalers and hardware integrators are facing margin pressure from the very components they need. The macro backdrop added to the cautious tone. The Fed's preferred inflation gauge, the PCE index, came in hot, with the core rate hitting 3.4%, its highest since late 2023. Chicago Fed President Goolsbee admitted inflation is too high, while New York's Williams said policy is well positioned. The takeaway: the path to rate cuts is getting longer, not shorter. Zooming out to a one-week view, the rotation is clear. Defensive and value names are finding favor. IQVIA Holdings is up over 10%, Waste Connections has gained 8%, and Target is up over 7%. This is a market that's starting to question the premium it's paying for growth and is looking for earnings stability. On the flip side, the pain has been concentrated. Over the last week, names like Cerebras and CoreWeave are down over 15%. Oracle has lost over 13%, and SpaceX has shed over 12%. The speculative froth is being blown off, and companies without a clear near-term path to profitability are being punished. Sector-wise, the rotation is also visible. Consumer cyclical and healthcare are the top-performing sectors over the past week. Meanwhile, technology is in the red, and energy is the worst-performing sector, down 2.5%, as oil prices continue to slide below $70 a barrel on hopes of de-escalation in the Middle East. Looking ahead, the earnings calendar is packed. We have results from big names like Darden Restaurants, General Mills, and Paychex. But the one everyone will be watching is Nike next week. The stock has been crushed, down nearly 70% from its highs, and the market is desperate for signs that the Win Now turnaround plan is working. You can find exclusive earnings transcript summaries on MarketSnap to get the key takeaways without reading the full call. A quick note on the broader landscape. The data center boom is creating a third wave of inflation, according to the Wall Street Journal. Demand for memory chips is pushing prices higher, and we're seeing that play out in real time with Apple's price hikes and Xbox's announcement that it's raising console prices by up to $150. For long-term investors, this is a critical dynamic to watch. It's the classic tension between AI's promise of future productivity and the very real cost of building that infrastructure today. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. Today was a masterclass in understanding the ripple effects of a single trend. The memory boom is creating massive winners and punishing losers. Keep that long-term perspective, and we'll see you back here tomorrow to break it all down.